Before you lodge your 2025 to 26 tax return, the ATO already has a data file on you, your employer's payroll figures, your bank interest, your rental agent's records, your Airbnb payouts, your crypto exchange report, your insurer's records if you own a boat, a caravan, or a luxury car above certain thresholds. From the 1st of February 2026, the ATO began cross checking every return against this data before it finalises your assessment. Not after, before. If your return doesn't match what the ATO already knows, you may receive a request for clarification before a notice of assessment is even issued. Stay until the 8-minute mark. I'll walk you through what the ATO is specifically matching in 2026 and 3 steps to make sure your numbers line up with theirs. The ATO's data matching programs are not new. They've existed in some form for decades. What's new in 2026 is the scale, the automation, and the reach. In August 2024, the ATO registered 3 major new programs. The first covers lifestyle assets: boats, planes, luxury cars, caravans, and thoroughbred horses, with insurers supplying policy records from 2023 to 2024 to 2025 to 2026. The second covers property management software data and rental bond board records going all the way back to 2018 to 19, running through 2025 to 26. The third covers office holder data from ASIC, ACNC, and related registries through to 2026 to 27, with the ATO estimating over 11 million individuals captured. Then, in January 2026, CPA Australia reported a new program, 300,000 child support records from Services Australia, covering 2024 to 25 to 2026 to 27, used to cross-check declared income and levy reporting. And from the 1st of February 2026, the ATO introduced broader pre-lodgement verification checks, automatically cross-referencing salary, bank interest, crypto, side hustle income, and work deductions against third-party data before a return is finalised. The consequences of a mismatch are real: an amended assessment, a reduced refund, a debt raised, and for people who haven't lodged at all and whose income is already visible to the ATO through bank or employer data, the failure to lodge penalty. As of 2026, one penalty unit is $313. For individuals, it compounds up to 5 units, $1,565, depending on how long the return is overdue. The 4 categories the ATO has publicly flagged as highest risk for 2026: work from home claims, rental property deductions, side hustle and sharing economy income, and capital gains from shares and crypto. If you earn or spend in any of those areas, read on. Here's exactly what the ATO is matching, and from whom. Lifestyle assets: if you own a boat, a plane, a luxury car, a caravan, or a motorhome. The threshold for caravans and motorhomes is $65,000, with similar cutoffs for other classes. Your insurer has already reported it. The ATO is acquiring between 650,000 and 800,000 policy records per year. Around 250 to 350,000 of those are matched to individuals. What they're looking for: assets that suggest a lifestyle inconsistent with your declared income. A $90,000 caravan insured under your name while you declare $30,000 of income raises a flag automatically. Rental properties, property management software, and rental bond board data spans from 2018 to 19 through 2025 to 26. Rent received, expenses, and bond details are all visible. The 3 things rental property owners most commonly get wrong: not reporting short stay income from Airbnb, misclassifying capital improvements as routine repairs, and overclaiming loan interest on mortgages that partly fund private purchases. If your agent deposited money into your account that isn't on your return, the data trail already shows it. Side hustles and sharing economy: Uber, Airbnb, Airtasker, eBay, Etsy. These platforms provide transaction records directly to the ATO. Every dollar of platform income is reportable. The common mistake is treating a side hustle as informal, cash in hand work that somehow doesn't count. If the platform has your ABN or your bank account, it has already reported you. Crypto and capital gains. Crypto exchanges have been required to report to the ATO for several years. The ATO acquires transaction records and matches them against declared capital gains. Small trades are not exempt. The 50% CGT discount may apply if you held for over 12 months, but you must first declare the gain. If you bought and sold crypto in 2025 to 26 and haven't calculated your CGT, that data is already sitting in your ATO file. Office holders, directors, trustees, and office holders are being captured through ASIC and ACNC data through to 2026 to 27. If you're a company director with related party loans, undeclared dividends, or inconsistently reported income, this is the net that catches it. Let me go deeper on the two things that trip most people up. The first misconception: data matching only catches deliberate fraud. It doesn't. The ATO's programs are automated and designed to detect discrepancies, gaps between what you declared and what third parties reported. Those gaps happen through honest error all the time. You forgot a small Airbnb weekend. You didn't know the rental bond board supplied your data. You estimated your WFH hours instead of logging them. None of those have to be deliberate to trigger an amended assessment. The standard is accuracy, not intent. The second misconception: small amounts fly under the radar. They used to. That's changed. The ATO's cross-matching is now largely automated. The cost of flagging a $200 Etsy payment that isn't on a return is effectively zero. The person who thinks it's only a few $100, they won't bother, is precisely the gap the automation is designed to close because it's so common. Here's the scenario most people haven't thought through. Pre-lodgement verification, which started from the 1st of February 2026, means your return may be reviewed before a notice of assessment is issued. If your numbers diverge from the ATO's third-party data, you'll receive a query or the return may be held. For people with accurate records, this is a minor delay. For people with rough estimates on WFH hours, undeclared platform income, or inflated rental deductions, it becomes a requirement to either justify the figure or accept an amendment. One more layer: the AFCX program. The Australian Financial Crimes Exchange supplies account and transaction data for 2024 to 25 to 2026 to 27, targeting financial crime risk patterns. If your bank transactions show cash flows inconsistent with declared income, large informal payments, undeclared overseas transfers, this is the program that surfaces it. Most taxpayers will never be affected. But if you've received large informal payments and haven't declared them, this data stream is now in play. 3 actions to take before you lodge. Action 1. Compare your pre-fill before you change a thing. Log into MyGov, go to ATO online and review every piece of pre-filled data: salary, bank interest, managed fund distributions, government payments. If the ATO has income on file that isn't in your draft return, add it before you lodge. And if something is pre-filled that you don't recognise, reconcile it against your own records before you remove it. Action 2. Audit every data visible income stream. For rentals, pull your agent statements and rental bond records and match them against what you plan to declare. For side hustles and crypto, download the annual report from each platform and exchange before you lodge. If a dollar flowed through a registered platform, treat it as already reported to the ATO. Action 3. Tighten the evidence on the 4 high-risk deduction categories. WFH. Confirm a real-time hours log exists. Rental deductions. Have loan statements and invoices ready, and check whether each expense is a repair or an improvement. Side hustle expenses. Keep receipts. CGT. Have your full acquisition and disposal records. What you can document, you can defend. What you can't document, you should not be claiming. This is general information, not personal advice. Your specific situation depends on your income sources, your records, and your expenses. A registered tax agent can review your return against the ATO's known data points before you lodge. If you want to know which specific deductions the ATO is flagging this year and what the new pre-lodgement checks actually look like, subscribe. New video every week. There's a plain English version of today's 3-step data check in the newsletter. Link in the description. This is the fine print AU because someone has to read it.